Now, the World Bank projects that Kenya's economy will grow by 4.9% this year, that growth being lower than the government's expectation of 5.1%. The bank expects the economy to rebound to a growth of 5.5% next year and 5.9% in 2019. The dip in growth to 4.9% comes despite the central banks maintaining a stable exchange rate regime as well as a tight rein on inflation. A rebound in the tourism sector and relatively low prices of crude oil globally have helped to mitigate the major shocks of the year on the economy. The growth is well below the level expected to achieve Vision 2030 and will be achieved at a time when global economic growth has witnessed a resurgence.
Global growth looks quite strong, relative to where we were 10 years ago and so forth. Growing now, expectation of growth in 2017, global growth of 3.6. That is significant. About 6 months ago, we were wondering if we are at stalling speed because it was at 3.1.
The first half of the year certainly faced the drought, and so that obviously is impacting our economic activity. The slowdown in credit growth, that's also one of the major shocks facing the Kenyan economy, and the prolongation of the electioneering cycle. I'd like to see a growth path which is led by the private sector rather than that which is driven mostly by the public sector.